Okay, my beautiful friends, I've been looking forward to doing this video pretty much all day long. I have a lot of stuff I want to cover with you. What a freaky Friday for assets. And we're going to talk about assets, markets, metals, cryptos, oil, and this. I want to talk about January because we'll address that in just a minute. So yeah, it's Freaky Friday, December 27, 2019. Stocks did nothing today. They were volatile, but did nothing. Metals did nothing. Cryptos did nothing. Crude did nothing. So it was pretty much a nothing day. But there's a setup here. There's something going on underneath this that I believe is going to have an effect on this market come January. And that's really what I want to talk about here. And I will elaborate further over the weekend, Sunday, when I do my markets, a look ahead. So, again, a nothing day in the stock market. But, you know me. I can't stop thinking about the markets. And it's not just because I'm a little obsessive with it, but because I want to be right for all of you. It goes without saying that I don't believe there's another guy out here anywhere who calls the market better than me. Every aspect of it. That's the truth. And it's because I feel a responsibility to you. I want to be correct. So with that said, let's back up a moment. What have we seen over the last 2 years? Well, despite the stock market vaulting higher from a big fat ugly bubble, President Trump's own words, to where we are now, somewhere way beyond that, earnings from these corporations really haven't done anything. So what we have witnessed is a multiple expansion, meaning that these companies, despite the fact that their earnings aren't doing anything, they're trading on higher multiples. Sounds like a bubble, right? Well, it is a bubble. And it's all being jacked up on the back of this debt bubble. Now, let's talk about the debt bubble real quick. The Federal Reserve, don't take my word for this, look it up for yourself, is now ballooning its balance sheet more so than during the financial crisis. No surprise to you if you follow this blog. I've been explaining to you that's what's going to happen, that would be happening. We are in full-blown quantitative easing, but don't call it quantitative easing. We have this repo scam that is going to get larger, and it must, understand, it has to. The scam between one bank lending money, cash, to another bank overnight and then passing it back and forth, this scheme must not just go on, but get vastly larger for two reasons. And I've covered this, but bear with me. Number one, to keep the illusion of liquidity. We're drying up. That's a fact. We are going to have another credit freeze. Everything is going to stop. Forget about the stock market crashing, melting down, or anything. Everything is going to stop working once we get a credit freeze. And unless the Fed increases its repo scam with the banks, that's exactly what's going to happen. So you can expect this to get much, much larger. You can also expect the Fed, although they're ballooning their balance sheet, that we haven't seen anything yet. It's going to get much, much larger as well because they must buy the entire yield curve. Without it, could you only imagine? I mean, think for a moment. If the Fed were not in here, number one, involved with the Wall Street banks, with the repo operation, literally passing cash overnight back and forth to each other to give the illusion of liquidity and also to fake the yield curve, to keep the short end pinned down. They're also buying the entire yield curve. If this were not happening, no one on the planet, I don't care who you are, who you may think you are, is smart enough to know where bond yields would actually be. It would probably be meteoric. And what would that do? That would melt down the stock market. And I mean melt it down. The only reason why we got this multiple expansion in these corporations and the stock market keeps going higher is because of suppressed rates. It's allowed, and it's being done, has been done by design. It's a deliberate act to inflate the stock market on the back of a massive, off the Richter scale, debt bubble. You understand this already. It's pretty incredible, but that's where we are. So you can understand where we're going. Now let's talk about this a little bit further. If things remain static, that is, the Fed continues buying the debt at their current pace, continues the repo operation with the banks at the current pace, this market looks to me like it's going to take a wallop in January. I'm not saying a market crash. I'm saying a 10%, 15%, maybe larger pullback will occur if the Fed remains static. However, I believe the Fed is going to increase everything, and soon. So, with that said, if things remain the way they are, I am very confident that we're going to get a pullback in this market that could be significant. If the Fed decides to all of a sudden increase, let's say starting today, well, then what will happen? Stocks will continue higher. I still think that this market needs to get back a little bit. We've gone straight up here. No asset class goes straight up without a pullback, despite tweets from the president, despite rhetoric, propaganda, nonsense, garbage, fakery, and the China trade deal story very soon. It's going to be signed soon. Very soon. You know, all of it. There's got to be a moment here where it's just the market normally will just pull back. And in this environment where the Fed is going to kick everything up higher, stocks will go up with it. All it's going to do is make the bubble larger. You will see multiples being paid for shares of stock rise. It's a bubble. It's going to end horribly, like you probably, very few of you, I think, have any doubt that what I am saying, what I've said this entire video, is not only going to play out to be true, but it is 100% true. Anyway, I'll cover more of this over the weekend during my Markets a Look Ahead segment when I get to assimilate more data. But anyway, that's where we are with this. This is a fraudulent market. It's a fraud across the spectrum. The United States has become some kind of banana republic where their leader must get there and cheerlead and cheerlead and cheerlead as the economy free falls, while the lies get larger. Again, this is no surprise to you. I've explained to you that the lies must get bigger, larger, and more unbelievable. They'll get more unbelievable, but the more unbelievable they become, the more people will believe it. This is a phenomenon that has gone on since time immemorial. All right, with that said, I think this video has been pretty important, especially with my forward perspective. I would love to hear from you. Please share the video. Get it out there. Now, people, it's Friday, and I'm going to leave you off with my favorite 3 things. Are you ready? Let's do it together. Love each other, care about each other, and be charitable. It's so important. This guy loves you from the heart. I mean it. I'll see you on Sunday for my Markets a Look Ahead segment. And that's it. I'm out of here.